Hello and welcome. You have tuned into Closing Trades on ET Now. I'm Shrishti Sharma and with me Snehi Shah. And Snehi, today is turning out to be a day of consolidation, while for the benchmark indices, we are off the day's highest point. Nifty is down that 25,000 mark as well. But I don't think we can complain much, Snehi, given the fact that the broader markets are at least supportive in today's trading session. What we are seeing is that the advanced decline ratio is also holding up well, while for the Nifty bank as well, at one point in time, we almost had over 200 points of gain. We are off the day's highest point from that particular index as well, but nevertheless trading absolutely flat as we speak right now. The more pressure is actually in the Nifty 50. Almost 85 points of cut is what we are seeing, but indeed a lot of sector rotation underway. Because autos as a theme we have been highlighting, especially the two-wheeler pack, the commentary remains on the positive side, and today on the back of the news flow for KTM specifically, Bajaj Auto is definitely leading it from the front, one of the top gainers in Nifty. Select financials from the likes of Shriram Finance, select PSU banking names are doing well, but on the flip side, the IT is definitely not lending the support in today's trading session. And add to that list, Nehi, that is Reliance, which is down almost 1% in trade right now.
Absolutely. So that's what the market breadth is looking like largely right now. You have autos that are outperforming, IT stocks that are lagging. Real estate once again has gone off the tear today and continues its gains. And before we tell you why real estate is doing so well, let's throw the spotlight on DV's lap. That stock is up 5%, ex Nifty 50 stock. Take a look at the moves that stock has seen on the back of its good set of earnings. And on that, you have brokerage upgrades coming in on that stock, where an antique has upgraded that stock to a hold rating versus sell. Target has been hiked to 6,575. Nuvama as well maintains its buy, but target has been raised quite significantly to 7,225. So good brokerage moves coming in on DV's lap. That stock is up 5%. Antique maintains hold, but target also raised to 6,575. So that seems to be the range where brokerages are pegging DV's to head on to next, but good set of numbers coming in. So that's DV's labs that's doing good. Another stock doing very well in today's trade. It was seeing double-digit gains at in the first half of the trading day. That was delivery on the back of some very good numbers. They've turned back to black this time in terms of profitability, 72.5 crores of profit compared to a loss of 68.4 crores. The delivery looking good, has slightly simmered down from the day's highest point, but not much to complain about on that front. Two stocks that are in focus, and one of them even more is Vodafone Idea. The stock has taken a sharp knock after the Supreme Court hearing on their AGR dues today, but the Supreme Court has refused to give them any respite on their AGR dues. That stock continues to tank lower, 9.5% lower. Similar story for Airtel, but at least that stock was holding in the green when the news came out. But well, yes, deep cut coming in on Vodafone Idea. Other than that, the real estate pack is in focus today. We're getting word from sources that the Maharashtra housing policy could be put into motion as soon as the end of this month. So that is a positive news flow coming in for a lot of these real estate companies. Nifty Realty top sectoral gainer right now, a 2.5% uptick coming over there. Perhaps names like Raymond, Godrej, Lodha, all of these stocks are doing very well. Phoenix, Oberoi Realty, Anantraj, TLF, all stocks are doing very, very well in today's trading session. So that's some of the top buzzers that we wish to highlight at this point, Shrishti.
Well, certainly, and especially the housing policy, Snehi, that you were flagging off. I believe that's coming after 18 years.
Absolutely. So it's a huge time. It's a very welcome call on the street, like the stocks are reflecting right now as well. It's been in the making for quite some time. It's been in the works, but it seems like there has been a consensus of industry experts and industry stalwarts and key components in terms of real estate players and also the housing finance companies, because once affordable housing finance, that demand starts to go up, we can also expect to see some demand for affordable housing financing companies. So anything like an Aadhar, Aptus, Aavas, all of those stocks could also be in focus. But well, yes, it's a welcome move coming in, and it seems like, that's what our sources are telling us, that it seems like this policy could be put into place as soon as the end of this month.
Well, yes, and that's the big news that we have been tracking, but it's our reporter Anurag Shah which actually got the story for us, and hence the stock are also reacting the same way. But let's get in more details on this one, and for this, let's go across to Anurag.
After a long wait, Maharashtra's housing policy is finally set to see light of day. After gap of 18 years, Maharashtra is all prepared to launch a new housing policy. The last housing policy was launched in 2007, and we have seen just before the model code of conduct announced in state of Maharashtra. In October, Maharashtra government came up with a draft notification of new housing policy, and the housing policy is set to benefit all stakeholders. The focus of housing policy is on affordable housing, to give incentives for green housing, to give an incentive for redevelopment project, and for developers also there are proposal for the premium rationalization. So as per our sources, by month end, Maharashtra government is all set to launch the new housing policy. The policy first will be brought in the cabinet, and after the cabinet decision, the cabinet will give a final note for the new housing policy. There are other, as per our sources, there will be a dedicated redevelopment cell to be set up within the Mahada for the redevelopment project, especially for the city like Mumbai. Then a project to get a support through TDR, premium rationalization, and incentive will also be the part of new housing policy. Single window clearance system to be implemented to ease project approvals, and policy also aims to accelerate some slum rehabilitation in urban areas. So these are the main focus areas of housing policy, and Maharashtra is all set to launch a new housing policy after 18 years.
Okay, Anurag, thanks for taking us through all of those details. The real estate sector has been on a tear for the last trading week as well. Top sectoral gainer continues to build on that momentum today as well. But on that note, let's welcome Nishchal Maheshwari, who's a market expert, and he's joining us on the show. And Mr. Maheshwari, thanks so much for taking the time out. Good afternoon, and thanks for joining us. Give us a sense of the kind of market moves you've seen today, because it's largely mirroring what we have seen on the relatively poorer days last week, except Monday and Thursday, where we had seen a big up move coming in. Today's market move is a lot in lines with Tuesday, Wednesday, Friday, where it has been rather subdued. It's not been all that bad, but there's not been anything on the positive side as well. Realty continues to outperform, IT continues to underperform. Lots of cues that we've taken from last week is what we are seeing today. Give us a sense of what you have made of the trading day. What stood out to you, because we've had major news flow also trickle in today.
Good afternoon. Thanks for having me. I think this is just a phase of consolidation. We had a very, very strong run, if you remember, last week for the first 2 days. And thereafter, I think it is being consolidating, because if you really look at it, we are from the bottom around 11 to 12% up. And we had quite a bit of turbulence during that time. And I think market has done really well, basically braving all this turbulence and still coming out on the top. So I think this is a consolidation phase. No need to worry. I still see a very, very strong market out there, and possibly we'll see a new high this year itself.
Right. Hi, Nishchal. Good afternoon. This is Shrishti also joining in. A possibility of a new high in this fiscal itself is what you're penciling in. But Nishchal, help us understand that which sectors can actually lead it through, because of late financials have been doing well, but any other sectoral leadership is emerging for you right now?
Thanks, Srishti. Thanks for having me. I think yes, financials obviously has been it's the largest weight on the Nifty, as well as I think it is coming from a background of almost 4 years of underperformance. So I continue to believe that financials are going to continue to do well. But there are a few other sectors which have started emerging. I think cement has done pretty well in this current quarter. There has been strong volume growth, and some of these companies have already also started showing price improvement. So I think cement is another one basically which should see good trend. IT, I believe, with all this turbulence which happened in the US, things are sort of settling down. US continues to grow strongly. So I believe basically in the second half of this current year, IT is also going to be another one basically which should be looked out for. Similarly, we are seeing good trends coming from the chemical sector. So I'm just highlighting all the sectors basically which have not done well, and these would be one of the sectors basically which will come out very strongly in the current year. Now, there are a couple of other two sectors, defense as well as capital goods. They have continued to do well, and given the recent issues, basically, I believe defense obviously has done very well, but capital goods also seems to be in a good spot. So I think there are 4 or 5 sectors basically which are doing pretty well at this moment.
All right, thanks, Nishil, for highlighting all the sectors that are looking good to you. But Nishil, just wanted to have your take on some of these exchange-related counters, rather, because a very good move is what we are seeing. And well, of course, while we interact with the investor community, the concerns regarding valuation still persist. But Nishil, what do you make out of this move, given the fact that the opportunity size, the growth triggers still remain immense? Do you believe that these companies from the likes of BSE, CDSL, they're actually in a position to command premium valuations?
Yes, it's sort of a duopoly. Basically, as you know, BSE, NSE not being listed, I think BSE is getting the benefit of that. But I think at these valuations, I think it's a clear avoid. I don't think so. Basically, something 100, 120 times, basically that kind of valuation world over. I think exchanges are anywhere between 10 to 20 times. And here we have a company basically, which is like 100 times. So I think it's a clear avoid. Similarly, I think CDSL and all. So the initial last 3, 4 years, the kind of growth you have seen, I don't think so. We are now going to see the same kind of growth in all these exchange-related plays because now you're coming from a much higher base. So the growth is not going to be the same, and definitely they shouldn't be having the same kind of multiples.
That's the take coming in on some of these exchange-related counters. BSC is still up around 2.5% in trade today at the day's highest point as well. But with this, let's also put the spotlight on two of the counters within the telecom space. That is Vodafone Idea, Bharti Airtel, and add to that list is Indus Towers. As we know that today, of course, there was a special hearing from Supreme Court on the AGR dues, wherein once again it's been a setback coming in from Vodafone for Vodafone Idea. But what are the details that we are getting it from that hearing, what the Supreme Court has said in their verdict? Let's go across to my colleague Sumit for all those details. Definitely, we'll try to get more details from our colleague Sumit in just a while. But taking a stock reaction, Vodafone Idea is down 9.5% in trade as we speak right now. Indus Towers 2 is down 3% in trade as we speak right now. But we have Sumit right now with us, and Sumit, take it away. Give us the latest that you are gathering.
Well, it's a shocking development for telcos. Supreme Court today rejected the AGR relief plea made by Vodafone Idea, Bharti Airtel, in fact, Tata Tele also. So, in a way, it is now the last step for the companies because they wanted a Supreme Court to review the overall thing and some way get government helping them. It started like this, that the council, Mukul Rohtaki, wanted the case to be adjourned till July, but judge said no, it is not possible. Then they said, judge said that government, if it wants to help you, it can help you, we will not come in the way. But they said government is not helping, it owns around 50%, still it is not helping. And then Supreme Court said we can't do much about it. So on that note, the overall petition got rejected. So it's a shock coming for Vodafone Idea and even Bharti Airtel. Even the Supreme Court judge calls it shocking, the petition. So in a way, it was clearly not taken on the way since the beginning that they may get some relief. So finally, it came like this, that it's not going to be any relief for Vodafone Idea on this front. Earlier, government had also rejected Supreme Court. In Supreme Court, Vodafone Idea said that it is not in a very good shape. It can't survive for a long time without any help. Well, recently government converted dues of Vodafone Idea into equity, so it owns around 49% in Vodafone Idea already. On that note, Bharti Airtel also went to Supreme Court demanding the same. So it's a lot of trouble brewing in telecom sector, and Supreme Court clearly is not no help for them currently.
Sumit, for getting us the latest on this particular front. So once again, a setback coming in from Vodafone Idea. But Nishil, a 9% of down move on this particular counter. What do you make out of it? But let's be frank, Nishchal, given the fact that there has been so many attempts by Vodafone Idea to get some kind of a relief when it comes to AGR dues, and every time the answer has been pretty much on the similar lines. Don't think that this is one of those surprising moves for the markets. Do you believe that a 9.5% correction is warranted?
I think slowly it is sinking in that there may be only two players remaining in the country. So, or maybe BSNL, if you take it, maybe three, and maybe Voda may not be around. Company itself has been talking about it, saying that they may not be able to sustain beyond 26. So I think that is slowly sinking in the market. So that's why I think you have seen this kind of downturn of around 9.5%. And clearly, I think the beneficiaries would be Bharti Airtel and Reliance Jio if the third player goes away. Now we have to see, basically government has been always very, very clear saying that they would want three players. So whether it gets merged with BSNL or what happens in due course of time, we have to see what will be the next action by government.
All right, so still in a wait and watch mode, but let's see what happens next. But as of now, we are off the day's highest point. It was just Nifty 50 that was trading in the red, but even now, Nifty Bank is also sliding lower, trading almost flat as we speak right now. But with this, let's also welcome two of our technical experts on the show as well. We have been joined by Aditya Agrawala as well as Ruchit Jain. Is here on the show with us. A very good afternoon, gentlemen, and thank you so much for your time. But Ruchit, firstly, let me come to you to have your take on the benchmark indices. What do you make of this particular move today? We are off the day's highest point. But Ruchit, we have been consolidating in quite a range for today's trading session. Do you believe that we are getting ready for a bigger up move, and which way if you're penciling one?
Yeah, hi, good afternoon. Well, we have seen a good up move in the recent past, post that breakout about 24,500, 24,600 resistance zone. Now, during today's trading session, we have some sort of negative divergence on the lower time frame chart. And generally, whenever such divergences are there, we usually get some pullback move in the market. So we are of the opinion that the markets might show some pullback move first, before resuming the next leg of uptrend. And again, the previous resistance of 24,600, 24,500 would be seen as a good support for the market. So while the overall trend for the market remains positive on the index front, we are of the opinion that one should keep a buy on dip strategy and wait for some more declines towards maybe 24,600 mark, where again a good buying opportunities would be seen. So overall trend remains up, but look for buying opportunities on some dips from current levels.
All right, so buy on dips, that's the strategy that you can adopt when it comes to benchmark indices. But Aditya, what's your take? If you're of the similar view, and what levels would you look for buy, if at all you are also on the bullish side?
Hi, Srishti. Good afternoon. Thanks for coming on the show. Along with that, definitely markets are in an uptrend, and especially I think one should look at the broader markets. This is the time to focus more on the broader markets, the mid cap and the small cap end of the market. I think the Nifty and the Bank Nifty might just enter into a consolidation phase because we've seen an up move in the benchmark indices first, and now the rally is trickling into the broader markets. I would like to draw your attention and viewers' attention towards the volatility index, which is the VIX, and which is slightly inching up. It's up almost 5% in trade today. That is where the majority of my concern lies, because it did try to breach that key support level of 16 in trade on Friday. And in trade today, it's actually jumped back to above 16 levels, currently somewhere around 17.5, 13, 17.3 odd levels. So if the VIX continues to rise from here on and slightly goes towards 19 odd levels, you're going to see choppiness return in the benchmark indices and then you could see a bit of a profit taking as well. So while markets do remain in an uptrend, I agree, one has to be a little cautious as far as the volatility is concerned, because if VIX continues to inch higher in next few trading sessions, I think Nifty could also see some volatile moves. So on the downside, one should clearly watch out for 24,800, which happens to be an immediate support level. If that is broken, maybe you could be in for some more kind of a corrective phase. And same holds true for Bank Nifty as well. While it was up almost 300 points at one point of time, it's given up all its gain, and especially led by the private sector banks. So I think Bank Nifty too needs to sustain above that key resistance mark of 55,800 for a sustained rally beyond 56,000 odd levels. So be a little cautious as far as benchmark and Nifty and Bank Nifty are concerned. Keep a close eye on the VIX, while at the same time your stock specific and sector specific churning continues in the market. That is likely to continue, Shishti.
Okay, thanks for that view coming in. Ruchit, I'll come back to you. Want to get your sense on some of the sectors that have been abuzz. Let's talk about something like a PSU bank that has seen a recovery from last week. On the flip side, IT continues to be lackluster. What are you spotting on the charts for both of these sectors? Are you seeing a turnaround story for PSU banks? Do you see that's here to stay? And do you believe that the consolidation the IT space has seen is now providing a base for a big jump from here?
So I think yes, PSU banks should see some good momentum in next few weeks, because if we look at the Nifty PSU bank index, then there is a high top, high bottom structure, and certain mid-sized PSU names such as Canara Bank, Indian Bank, Union Bank, they have been witnessing good price volume action where price up moves are supported by good volumes. So I think over next few weeks one can expect a gradual up move in the PSU banking space, but yes, one need to be very selective with only stocks where the volumes are quite strong. And IT as a space, I believe that there would be some consolidation. Initially, we have seen a pullback move from this recent swing low in the Nifty IT index, which was around 33,000, which was around 31,000 mark. From there, as the trade war concern eased, we did see some pullback move, but the index is yet to surpass its 200-day moving average hurdle, which is around 38,900, 39,000 mark. So I think some sort of time-wise correction. I think price-wise, IT has seen the corrective phase is done, but yes, some time-wise corrective phase could be seen in some of the IT names.
All right, so a time-wise correction is due when it comes to some of the IT names. But other than that, Nishal, I just wanted to have your take on the chemical basket, because that is one of your preferred sectors, like you just highlighted, but that's kind of a diversified sector. The companies are quite very divided when it comes to their region and the geographical exposure. Other than that, the segments that they cater to. Give us some sense that which area do you believe has a bigger scope of growth from here on?
So I think within the chemical basket, I think the agrochemical is one space which seems to be bottoming out. So we are clearly seeing most of the companies have said, basically both domestically and internationally, that they have started seeing volumes growth coming back. The adjustment in terms of China dumping and also a lot of companies having overstocking. I think those days or those times are sort of past in the last 2 or 3 quarters. Companies are now seeing strong growth coming and strong demand coming basically from the agrochemical sector. So within the whole space, I think agrochemical is one space within the chemicals that is seeing quite a bit of demand. Secondly, I think on the industrial side also, you are seeing good demand coming back, especially the industrial chemicals. So I think these are the two spaces we are seeing. Specialty as yet, we have not seen very strong demand coming back. But I'm quite hopeful basically in the next 2 quarters, you're going to start seeing specialty also coming back strongly.
So that's on specialty chemicals, but Nisha, I just want to ask you, I just want to ask you a little bit about the fertilizer side of chemicals. Last couple of weeks, we've seen fertilizer stocks do very well in trade. Help us understand the moves that we've seen on something like a fact you have that's up 7% in the last trading week. It's been very good for some of these names. Help us understand fundamentally with everything that's been happening in the chemical space. Do you believe that this move in fertilizers is here to stay?
I do not track the fertilizer sector very closely, but what I see here is basically, given that the monsoon is our outlook on monsoon and the IMD's prediction seems to be that it's going to be better than expected. And again, I think monsoon has hit early in the southern side. I think that is an anticipation. Fertilizer companies are doing well. But I think this is the same thing which I was talking, agrochemicals. When you speak to most of the companies or their calls, when you listen to their calls, they are saying that domestic demand is pretty strong. So I think this is all in anticipation of a good monsoon.
That's the take on the chemical as well as fertilizer basket. But Nishil, with this, we let you go. Thank you so much for taking the time out and
Thanks a lot.
speaking with us. All right, so as of now, the markets are in the red zone while Nifty Bank is trying to stabilize a bit at those levels, but almost a 90 odd points of cut is what we are seeing on Nifty 50, still below that 25,000 mark. But let's also get you some of the trading ideas from our experts and get you the closing trade picks as well. And Ruchit, you go first. Tell us which is the stock that is making up to your list.
So, realty is one space which is looking quite interesting. We have seen that, off late, this interest sensitive sectors such as auto, real estate have started gaining, good buying traction. Macrotech developers, Loda within the space, is one of the relative outperformer within the sector. And price volume action also seems very strong over there. So we expect this outperformance to continue. So short-term traders can buy this stock at current market price with stop loss below 1375 for potential targets around 1500. And within the PSU space, I think PSUs are also one space where a lot of buying interests have been seen. Initially, it started with that PSU defense stocks, then it spread onto the railways and some other PSU names as well. I think within the PSU basket, Hudco is one stock which has shown some good consolidation over last few weeks, but now is on the verge of a breakout of this consolidation phase. So I think this stock should do well going ahead. The price-wise downside seems to be very limited from here on since it has already formed a good support base. So Hudco can be bought with stop loss below 227 for potential near-term target.
Picks right now. Aditya, what about you? What are you lacking in the current market setup?
So I've got a couple of buy recommendations as well, Snehi. The first one is Gale, very interesting looking chart setup after a good set of consolidation. Stock is now breaking out of a downward sloping trend line. So I think there is more room on the upside. For a target at 200, I'll buy the stock with a stop loss at 183 on the downside. I also got a real estate stock as a buy recommendation. So the entire real estate gamut is looking interesting. Overall Realty is on my radar. It's a very strong looking chart setup. It's a breakout from a consolidation pattern. So for a target of 1900, I'll be a buy here. Place a stop loss somewhere around 1670 on the downside.
All right, so those are the top picks. Don't go anywhere. We'll be right back with more on the other side.
Hi there, welcome back to Closing Trades. About 30 minutes or so of the trading day left. Nifty continues to be slightly subdued, a 0.2% cut coming in. Now above the 24,950 mark, but still below the day's highest point and still below 25,000. But let's talk about some stocks that were in focus today. Divi's Labs, like we mentioned at the beginning of the show, a stock that has done very well in today's trading session. Almost 5% gain coming in on that stock right now on the back of a stellar show of Q4 numbers from Divi's Labs. Margins have surged over 250 bips. Profits have jumped 12% year over year. Brokerages have shared mixed views post the fine print. However, most of them continue to remain bullish. Varun is joining us with more details on the earnings fine print as well as what brokerages have made of this stock.
It has been a strong quarter for Divi's Lab, wherein the revenues have gone up by around 12% and the profit has gone up by around 23%, and this is on back of the better EBITDA margins that the company has delivered, because EBITDA margin have gone up by around 253 basis points. Also, the gross margins have expanded by around 122 basis points on a YOY basis and 181 basis points on a quarter-on-quarter basis. And so this was basically led by lower operational expenses. That is what brokerages are saying. Also, brokerages are saying that this has been the best gross margin after Q2 of FY23 and the best EBITDA margin after Q1 of FY23. Also, the CDMO pipeline that is gaining momentum and the API business that has shown improvement for the second consecutive quarter, and the YOY revival in the API segment has been after 8 quarters. So this is very positive for the company. The nutraceutical business that has grown for 3 quarters and the Divi's Unit 3 that has begun commercial operations, and brokerages are saying that this would actually reduce the overall supply chain risk and also enable gross margin expansion because of backward integration going ahead. And because of this, there are brokerage houses who have raised the target. Antique has upgraded the stock to hold from sell. They have raised the target to 6,575 versus 4,150. Nuama has a buy call on the stock. They have also raised the target from 6,830 to 7,225 now. And Motilal Oswal, they have a neutral call on the stock with a price target of 6,540. So it's a good result, and also brokerage houses have given a thumbs up on the stock.
So So that's a roundup on Divi's Labs and why that stock is surging so much in trade. But while we are talking about a big winner, let's also talk about a big loser in today's trade, and that continues to be Protean eGov, because that stock is locked in lower circuit of 20%. E-governance solution provider, this company slumped after not being shortlisted by the Income Tax Department to design and develop the PAN 2.0 project. The company had participated in the RFP bid proposal for the project, which was for technology revamp, including design, development, implementation, operations and maintenance of the PAN systems. Now, earlier in the day, the company also had their con call wherein they have gone ahead and given the reassurance that missing out on this project is not going to have a major overall impact on their PAN segment. But this statement coming in from the management also has not brought in any respite for the stock, because that continues to be locked in 20% lower circuit. Let's go across to Varun, who's joining us once again with the details of what losing out on this bid could mean for the company going ahead.
Definitely. So it's a big blow for the company because see, if you look at the Income Tax Department has actually issued a notice for request for proposal for the PAN 2.0 services, and the company has also participated in the request for proposal bid. But the company was actually not shortlisted by the Income Tax Department. In fact, the Income Tax Department has said that they do not consider the company favorable for the next RFP selection process. Now, if you look at the overall PAN 2.0, it had a financial outlay of around 1440 crores. If you look at the overall PAN business, it has a significant contribution to Protean eGov overall revenues. It contributes around 50% to the company's revenues, and Street was expecting that the company would get a good amount of business from the PAN 2.0 service, but the company has not been shortlisted. Now, analysts on the street are actually expecting that this would create medium-term uncertainty on the PAN business. In fact, they are saying that for FY26, the impact might be muted, but they expect significant collapse in the overall revenue streams in the next 2 to 3 years. And also, they are seeing a big decline in the overall revenues in FY27, because if you look, this overall PAN business is actually also contributing to the overall cash generation of the company, and the cash generated from these services could have been used for new initiatives. So actually, not getting shortlisted for PAN 2.0 creates a big uncertainty for the company in the coming years, and that's the reason Street is worried about this, and that's the reason you're seeing this type of reflection on the stock price, which is down by around 20%.
All right, thank you so much, Varun, for getting us all those details. Even the company did conduct a con call at 12:30, but even after that clarification, there's been no substantial recovery, or rather no recovery on that stock, and still locked at a lower circuit of 20%. But with this, let's also welcome on board Gurmeet Chadda, who is joining us on the show right now. Hi, Gurmeet, a very good afternoon, and thank you so much for your time. But before we start talking stocks with you, Gurmeet, I was just going through one of your social media profiles, which says that Sher Puttar, after having Chola Bhatura, it was an image of a lion who was just sleeping and resting. So is that an indication that given the good up move in the markets, one should now take it lightly, take it easy, and maybe have some rest?
Yeah, some of it, yes. I think, see, people who did not do much, did not bother too much about tariffs and border issues and Trump, etc., have actually been rewarded. So I sometimes inactivity is good, but the only thing is that we will continue to see. I mean, the current problems will disappear. Some new problems will come in next 3 to 4 months, and that's the nature of the market. But from broad macro perspective, things are slightly getting better for India. I think crude being at $60 is a huge boost over the medium to long term. Interest rates have come down. System liquidity is positive. RBI has pivoted, and all our high frequency indicators, whether it is PMI, whether it is IIP numbers, whether it is GST, tax collections, are showing some uptick. The earnings season so far, I believe, has been a little soft. I think I would have probably been happy with early double-digit earning growth, but Nifty is around 8.5, and if you see the broader market, the first 600-700 stocks, I think that's almost around 10%. So if you are at 21 times earnings, I mean, and earning growth, the quarter is just around 10%, then you got to be a little more selective and not get carried away.
Okay, Gurmeet, hi, this is Snehi also joining in. I have also been going through your Twitter because after the tweet Shrishti mentioned, I was also inclined to take a look. And what I was thinking about, and this is something that you have also tweeted about, is the cash position that a lot of fund managers, retail investors, a lot of players in the market have been accumulating recently. But the kind of run up that we've seen over the last week, especially on Monday and on expiry day on Thursday, you know, sitting on cash would have made someone feel really, really bad. So what would be your portfolio strategy going ahead, given that you also have gold that on one hand is cooling off? Indian equities seem to have taken off from here, but we don't know what the road ahead looks like. How would you position cash in your portfolio?
See, each fund manager uses cash differently, and I think there's too much hue and cry being made about mutual funds sitting on 3 lakh crore of cash. 3 lakh crore of cash is not even 6-7% of the assets the industry manages. So I don't think so. It's a big number, and same guys who were sitting on cash were being praised in February. So cash is always a double-edged sword. But as I said, each to his own. Somebody wants to keep cash for opportunities. Somebody believes in being fully deployed, saying that the mandate is to be in equity. So it's very difficult to figure out who's right, who's wrong. If the market corrects tomorrow, we'll have a very different conversation. But unless the cash is 20-30%, I don't think so that should be a subject of discussion. I think it's more to feel some pockets fund managers are not okay or comfortable with valuations, and sometimes you want to wait for better opportunities in terms of stock booking. I think broad portfolio allocation, I think, as I said, it's good to be a little more balanced right now. US 10-year yield is around 5%, but 30-year yield is around 5%, 10-year yield is upwards of 4.5. And I think this will create a lot of issues in US economy and will probably make the US government do more trade deals earlier and lessen the tariff impact. Also, my sense is Fed will step in with either liquidity infusion or rate cut at some point of time. And some larger shift has to happen. So I think US exceptionalism, their bonds as well as equity have been overowned now for 10-15 years. And I think a large chunk of that will shift both to gold, emerging market bonds, and equities. And as I said, with crude being lower, our fiscal numbers being good, fiscal discipline being there, RBI likely to give a large dividend this week, hopefully maybe close to 3 lakh crore. Our macro picture is looking good. So keep some long duration bonds in the portfolio, maybe 5-10% in gold and silver, and equity be a little more large capish in my view, and gradually build it up. But second half of the year is likely to be better.
All right, so that's the take and the strategy that Gurmeet was discussing. But moving on to an ET Now exclusive then, wherein sources tell your channel that government is reviewing fertilizer supply-demand scenario in the country. The centre is also likely to provide additional subsidy if prices continue to rise in the international market. Prakash Priyadarshi has more details on this one. Take it away, Prakash.
The sources are suggesting that the government has reviewed fertilizer demand supply scenario in the country. We're given to understand that the fertilizer ministry has taken stock of the availability of NPK category fertilizer amid rising prices in the international market. DAP prices have increased by more than $100 per ton in the last 2 months, crossing $650 per ton, and that's a matter of concern for the government at this point of time. Discussions are underway and sources are indicating that the government is likely to provide additional fertilizer subsidy if prices continue to rise in the international market. That will lead to higher fertilizer subsidy allocation for FY26, which is budgeted at 1.68 lakh crore so far. Discussions are underway at the official level, and sources are indicating that the fertilizer ministry may approach the finance ministry for a special financial provision to compensate fertilizer companies if there is shortfall in their margin. However, fertilizer ministry has asked the fertilizer companies to import sufficient fertilizer to maintain availability in the market. And good thing is that the farmers will continue to get fertilizer at affordable prices.
Thanks so much for taking us through that. We'll be keeping you updated on this front as and when we have more details. We've spoken at depth about the chemicals and fertilizers space, so we'll keep you abreast with everything that's happening on that front. But Aditya, let's come to you. I want to get your view on some of these names from the pharma pack that we are seeing. We've had a lot of news flow coming in today for, let's say, likes of Dr. Reddy's, GlaxoSmithKline, Cipla. Lots of US FDA action happening on the fundamentals, but on the charts, tell us what are these names that you are preferring from the pharma pack right now? What's looking good? Because pharma has also had its fair share of wave coming in on the tariff uncertainty on the Trump front, at least. But now we're seeing that pharma is trying to pick up a little bit today. Also, amid a subdued market, pharma is doing okay for itself. It's trading with gains of more than 0.5% Nifty pharma. So what's your outlook on that? And if you had to play this sector, what would your preference be?
So Snehal, definitely play the sector, and I think selective buying can be done as far as pharma space is concerned. I don't think so. All the pharma stocks are looking attractive at current levels, and one should look at the entire pharma gamut as such. Definitely, Divi's Lab stands out within the pharma space, not only because of today's 4.5% up move, but overall the chart structure is very strong, bullish, and a fresh breakout in trade today from that consolidation phase. So I think somewhere around 7,000 is what I'm looking on. Divi's Lab can easily be tested. If we keep aside Divi's Lab, I think so Lupin is also something which is looking very interesting to me, and I think one should take a look at Lupin. It's going through a consolidation phase at the moment. Once that consolidation phase is over, I think Lupin is good to test levels of 2,400. So this is another stock which is looking interesting to me. Apart from that, Torrent Pharma is something which is looking interesting at current levels. I think so Torrent Pharma is again going through some kind of a consolidation phase. Once that consolidation phase is over, you're going to see 3,600 kind of a level in Torrent Pharma as well. And the fourth and the final stock that I really like within the pharma space is Dr. Reddy. After that sharp correction that we had seen in the stock, it's bounced back and come to good levels. I think from here on, stock can gradually inch higher to levels of 1,400 to about 1,500 on the upside. So these are the top four bets within the pharma space. I'll not go long on the usual names, which is Sun Pharma, Cipla, and or Window Pharma at current levels. I think they're going through some kind of a consolidation, and maybe some profit taking can also be seen in these stocks. So we'll avoid these three large cap names, the Sun Pharma, Cipla, and Aurobindo Pharma. Apart from that, the four names that I just discussed, we are concrete on them, and I think there is good room on the upside.
Today coming in on the pharma space, but with this fears, it's once again time to slip into a very short break. Don't go anywhere. As we come right back, we will be getting you some of the BTST ideas from our experts and also prep for the market close.
It's missing something. I feel like it needs a frame over.
What's a frame over?
Now that's a frame over.
Stylish frames starting at rupees 800. Over 20 international brands, free eye test. Get your frame over today at Titan Eye Plus.
Welcome back to Closing Trades right here on ET Now. We have a whole host of experts with us who are guiding us and helping us to get your strategy at place when it comes to some of the sectoral preferences, what should be a strategy on index. And Gurmeet, I just wanted to come to you to have your take on pharma space, because just before we did hit the break, Aditya was giving his technical check. But Gurmeet, though Divi's Lab management commentary has been a stellar one, given the fact that the management did not comment anything incremental on the margins, the street is definitely liking their double-digit growth guidance. But from the generic sides, the numbers have been quite okay. Gurmeet, anything that stands out for you within pharma?
So, pharma, you have to break it into 3-4 parts, because it is very complex. So I think on generics, I think till the time US has more clarity on tariffs, I think will continue to be volatile. Although I firmly believe India would eventually gain even in there. So Sun Pharma, I think with now a larger portion of specialty portfolio, should do well. With obviously there will be some near-term hiccups. CDMO is one space we really like. I mean, these numbers are fantastic, both in terms of the CDMO book as well as margins. I think there are molecules worth 40-50,000 crores which are going off patent, and companies which are into novel custom synthesis. Probably, this is like an IT opportunity in 90s, the pharma outsourcing opportunity. US Biosecure Act, though right now hasn't been passed, but it actually names a lot of Chinese companies as far as they want to go about, especially on genetic mapping. So I think pharma outsourcing to me is a huge opportunity coming. A lot of our companies are quite old. They have done a lot of capex in last 3-4 years. And in a lot of these cases, this capex is bigger than what they have done in last 20-30 years. So you can look at something like Laurus, Hikal, Divi's, Newland. There are a host of good players depending on what molecules you're tracking. And then there is, the branded space, which has the likes of Mankind Pharma, which are focusing on consumer health, women fertility, and almost like it works like an FMCG business there. So we are looking at a combination rather than just only, trying to differentiate one stock versus the other. The pharma also, I think the weightage in the Nifty index will go up. We are currently just about 6%. I think it's too low for a country like us, which is so underpenetrated as far as healthcare is concerned.
That's Gurmeet's strategy on the pharma index. Let's move away from that for a bit and talk about BEL. That stock absolutely flat in today's trade, but we have numbers for BEL that will be trickling anytime in now, and Bharat Electronics has been in focus on the back of order inflows and steady growth in the quarter gone by. But let's understand what quarter 4 has shaped up to be like for this defense heavyweight. What can we expect when the numbers finally come out, and what's going to be important parameters to watch out for? Kanishka is joining us with all of those details. Take it away, Kanishka.
Well, Bharat Electronics is slated to announce its Q4 FY25 earnings, and analysts are anticipating a modest top-line growth driven by a strong order book and continued thrust on indigenization. According to Bloomberg estimates, revenue is seen rising almost 4% year-on-year to 8,889 crore rupees. However, the bottom line is expected to see a marginal dip with profit after tax likely at 1,752 crore rupees, down about 2% year-on-year. Analysts say that execution of large defense programs like Akash Weapon System, LRSAM, Naval Fire Control Systems, EW systems and radars will be key revenue drivers. Also remember, Q4 is seasonally strong for order inflows with fresh orders likely from the Indian Navy and Air Force. Meanwhile, operationally, EBITDA is estimated at 2,249 crore rupees, a slight decline of about 1.7%, while margins may contract by 140 basis points to 25.3% on account of input cost pressures and project execution dynamics. Some of the key factors to watch include the company's ability to sustain margins, progress on indigenization efforts, execution of large-scale defense projects, and expansion into key export markets. Now, a robust order pipeline and government's Make in India push are expected to support growth in the medium to long term. On that note, let me tell you that Bharat Electronics' total order book as on April 1st stood at around 71,650 crore rupees, including an export order book of 30,000 crore rupees. Apart from that, all eyes will be on management commentary for outlook on new order inflow, defense capex trends, and the impact of upcoming policy shifts.
Okay, thanks Kanishka for taking us through all of that. BEL going to be in focus today and tomorrow as well, because we'll have numbers coming out anytime now. But Richard, want to get your sense on what you are making on BEL, along with that some other defense names as well, because the kind of run-up that we have seen in these defense and railway counters last week has been unimaginable. The kind of double-digit moves that we've seen coming over here. Last 1 month itself, BEL is up 21%. Last 5 trading sessions up 10.5%. Tell us what's the outlook going ahead, because so far it was supported fundamentally and a lot of it was coming in from the sentiment value that was building up in the market. But what lies ahead for these defense names and especially BEL?
So I think these positive sentiments are likely to continue for the defense space. We started an uptrend in many of the defense names right from the first half of March month itself, where the stocks such as BEL was there, HAL was there. They started forming that high top, high bottom structure. And now post this, what we have seen after this India-Pakistan, what has happened in last 1.5 2 weeks, the stocks have given a breakout above the consolidation, and this up move has been supported by very high volumes in many of the defense names. So this high volume activity clearly indicates a good buying interest in much of the defense name, due to which the price-wise downsides would be limited in these names. So I think whether BL is there, HL is there, or solar industries within this space is there. So I think these are stocks which have started this next leg of uptrend, and any kind of corrections if they come for any reason, I think those should only be used as a good buying opportunity. So overall trend remains positive. Post numbers, if we see any knee-jerk reaction, I think that would be a good buying opportunity for BEL as well.
All right, so that's the take coming in on BEL. The stock will remain in focus on the back of the earnings. But Aditya, just a few minutes left for the market to close, and 25,000 and below is where the Nifty is trading at, while Nifty Bank is showing a bit of a resilience. What do you make out of this? And if somebody is already having some positions on the long side, or rather on the short side, what sort of an adjustment would you advise for?
It's more of a consolidation, Srishti. I won't read too much into today's profit taking, while at the same time I mentioned do keep a close eye on the volatility index, because that is something which is at current levels is a bit worrisome. Sustain above 16, it's trying to hit that 19 mark. On the downside, as far as Nifty 50 is concerned, 24,800 is a very key support zone. So if you're already long on the markets, probably keep a stop loss somewhere around 24,800. If that is taken out on the downside, maybe you can have another 200 point slide from current levels. Otherwise, I don't see any reason to panic just yet till the time we trade below 24,800. And if you're already short on the market, I don't think so you're making too much of a money. Despite that, if you're short on the market, maybe place a stop loss somewhere around 25,000, because that is one resistance which the index is not able to take out decisively. So for shorts, 25,000 should be your stop. For longs, 24,800 should be your stop. For people who have no position, stay like that. Don't take any position in the Nifty 50. Look at stock-specific trading ideas. That is where the chunk of the activity lies. As far as Bank Nifty is concerned, though it's closing somewhere in the positive territory, but again, that too is seeing some kind of a consolidation at the moment. 55,700 on the upside, 55,300 on the downside happens to be your consolidation zone. I think PSU banks will see another leg of rally, and that can lead markets, especially the PSU basket and the Bank Nifty, to test somewhere around 56,000 on the upside. So slightly more bullish on Bank Nifty. Stay away from Nifty as of now.
Thanks for that view coming in. Ruchit, very quickly before we let you go, we have only 3 minutes till close tomorrow. What do you think is going to steal the spotlight tomorrow? Is it going to be the benchmarks? Is it going to be the broader end of the market?
I think it will be the broader end of the markets, because the overall market bet still remains positive in spite of the consolidation that we've seen in the benchmark index. So I think taking a stock specific approach would also be a good trading idea for tomorrow.
Gurmeet, Ruchit, Aditya, thank you so much, the three of you, for joining us and sharing your outlook on where the sectors are headed and what the market construct would be like tomorrow. With that, viewers, we have only about 2.5 minutes to go for market close. Let's start winding down and take stock of what today's trading session has been. Nifty 50 closing around the 24,950 mark. We are not reaching that 25,000 mark today, unfortunately. So that's 0.3% cut coming in on the Nifty 50. Sensex 2 in tandem, 0.3% cut coming in, but somehow managing to hold above that 82,000 mark for now. We have a couple of minutes. Let's see how that settles. Nifty Bank showing resilience through and through over the course of the trading day today. Almost a 1.5% uptick coming in on Nifty Bank. 55,400 looking strong on that front. Let's put up the broader markets, because that's where the real show of strength was coming from today. Nifty Midcap has simmered down, no doubt. A 0.1% uptick coming in on that front. But let's see what the small cap space is doing. Small cap continues to outperform the benchmarks and its peers, because you have a 0.5% uptick coming in on the Nifty small cap index. Advanced decline ratio tilting in the favor of the advances, but not by a whole lot. On the back of that, India VIX was up 4.5%. We're back above that 17.3 mark on the India VIX, so that's something to watch out for in tomorrow's trading session. Let's pull up some Nifty gainers and losers in today's trade. It's been the day of the auto pack today. A couple of names from that space. Bajaj Auto has done well. You have Hero Moto that has done very well. Apart from that, Shriram Finance, Bajaj Finance, IndusInd Bank, NTPC, Hindalco, SBI continue to be your top Nifty gainers. On the flip side, Grasim, Eternal, Infosys, Tata Consumer Tech, Mahindra, TCS continue to be your big losers in today's trading session. If you take a look at what has happened in terms of sectoral movers, Realty continues to once again outperform the entire street. A good 2.2% uptick coming on that front. PSU banks up 1.5%. Flattish moves coming in for Pharma, Auto, Bank and Energy. energy along with Nifty metal, but they're continuing to sustain in the green by the skin of their teeth. On the flip side, you have Nifty IT, big loser in today's trade, almost 1.5% lower. You have Nifty Media and Nifty FMCG that has ended almost at the flat line. Some other stocks to talk about in today's trade. Delivery, good set of numbers coming in. That stock has done pretty okay, up 10% in today's trading session. You have RVNL from the railway pack that continues to be a buzz. Raymond has done well from real estate. Lots of stocks have held up very well. Divi's Lab, of course, on the back of its quarter four numbers and upbeat brokerage notes coming in, that stock has done well. On the flip side, what's not done well? GMR Airport, we have numbers for their annual, for their monthly traffic inflow and outflow. 4% cut coming in on that front. PB Fintech lower by 3.5%. Mazgaon Dock today seeing some profit booking, a 3% cut coming in on that front. Indus Tower, Vodafone as well as Bharti Airtel continue to languish. But that's how we're wrapping up for today's trading session. Nifty below that 24,950 mark as well. So that's where we're ending on a slightly subdued note. But let's see what tomorrow's session holds for us. It's a goodbye from me, Shrishti, and the team that put this show together. Thanks so much for tuning in.